this evening. AI-powered equity investment platform Investor AI has raised 80 crore rupees in a Series A funding round from ace investor and founder of Lucky Investment Managers and his associates, Ashish Kacholia. Funds raised will be used for scaling the business and adding new products. And to elaborate on this and the road ahead at Investor AI, joining me now is its co-founder and CEO, Bruce Keith. Also with me, my colleague Ritu. Bruce, welcome to Startup Street. Now, Investor AI uses advanced AI to power stock recommendations for investors. Before we talk about the fundraise, talk to us about your offerings. How are they unique as compared to your competitors? And also, what kind of returns have you given to your investors?
So thank you very much for having me. So Investor AI is, as you rightly say, is AI-based recommendations. And we've been running these recommendations now for 3 years. And in all those years, we've consistently delivered roughly 2x the market in terms of returns. So very proud of the returns those model portfolios have delivered for those underlying investors. And that's initially through cash equities. More recently, we've seen some in intraday. And what we're going to see more, and part of the reason for the fundraise, is to increase the product set through MTF and through derivatives in the F&O market as well.
Well, Bruce, hi, this is Ritu stepping in. Let's get to that funding more specifically then. You want to use these to develop new products and AI, scale up your sales and operations. What exactly are these new products? And, any targets you could share with us in terms of the sales growth that you anticipate with this fresh round of funding?
Yeah, thank you. So if I think about kind of where the business has come from, it's been based on using AI on end of day and fundamentals and technicals to really develop those predictions and those model portfolios. And where we're moving to is using more and more real-time data. The AI is becoming more advanced. And what you're seeing is if I think about kind of AI in the hedge fund world with the Renaissance or the Citadels of this world, that's not been available to the regular investor. And what we're looking to do is to really advance the technology, bring the costs down, and make that available to the end investor, whether that's F&O strategies, whether that's MTF, or whether that's development of kind of regular or high net worth model portfolios, but all of them delivered in a really simple and easy to use way. And importantly, in every case, the investor has the opportunity to choose whether they want to invest in a particular position or not. So it really is a combination of using the AI and the machine and combining it with that investor's own specific requirements.
All right, Bruce, picking up from what you just said, you offer over 15 equity baskets with different strategies, and some of them are now in their third year. You claim all baskets have significantly beaten the index in the last 12 months as well as since inception. If you could take us through your tech edge, you spoke about your technology. If you could elaborate further, how do you ensure prediction accuracy?
So, no one's going to be right all the time, and markets go down and markets go up. So the best you can do is you need to sort of train your AI on the right things. So that's the first piece. And you don't train it to seek super returns. You train it to look for good, steady compounding opportunities. So the first piece is train it on something simple. The next piece is you've got to keep retraining the AI. And as part of that requires quite a degree of oversight on the process and what's going on. And then thirdly, and I call this the Scotch whisky effect, a machine that's been around for 3 years has learned an awful lot more than one that's been around for 6 months. So as time goes on, the maturity of the machine improves and the learning improves, and that in itself kind of helps with the ultimate win rates that you see on the AI. But truthfully, you're not going to be right the whole time. But what you can look at is you can look at win rates. You can look at win rates on stocks and baskets, and you can see how well our AI does against anyone else's baskets.
Well, Bruce, that's an interesting analogy for the evening, with regards to maturity. But currently, as we understand, your products are currently available from, through brokers like HDFC Securities, JM Financials, IIFL and Yes Securities as well. What is the nature of the relationship here? Are these co-branded products or are you just powering them?
No, all of those brokers have huge customer bases. They've got lots of people who want to find the right kind of model portfolios and investment baskets to invest in. And we're one of the providers of those baskets. So you'll see Investor AI inside all of their apps, powering different types of products. So, it's very much their customer. We're very much trying to provide something that is different for that customer. So if you're a customer of one of those organizations and you want to try our product, it's a great way to do it.
All right. Bruce, tell us, how do you see AI redefining the investment landscape? How do you continue to create winning outcomes? You serve the millennials, the Gen Zs. How is this investor class different from the traditional class? And, how do they behave differently? Are they more risk takers? How do they spend differently?
I think that's a brilliant question. I think I would define our audience as digital investors. I'm in my mid-50s. I'm a digital investor. My chairman's in his 60s. He's a digital investor. So I don't think to be digital, you have to be Gen Z or millennial. I think the truth is the majority of digital investors are Gen Z and millennial. So I think the positives for me, from an India perspective, the digital infrastructure and the fact that everything is mobile first is huge. So that allows you to get to lots of people. I also think there's a real equity ownership culture that exists in India. And I see something similar in the US. I don't see it to the same extent in Europe. And I think that desire to go and invest and really make something of that is a kind of great start point with that crowd. I think the difficulty with the Gen Z and the millennial crowd is they don't necessarily trust the institutions that their parents trusted. And they're looking for something different. And they're quite often looking for something that has that technological edge that they can tie into and they can measure and they can see transparently what's going on. And they can decide from that point whether they want to invest in that or not. So I think that's the overarching piece. I think the other side is there's a lot of young people participating in the derivatives market, and we all know that SEBI's sort of looking at that, and quite rightly so, to try and make sure that people in there know the risks they're undertaking. I do think we all have an obligation to try and help people, whether it's with stop losses, whether it's to think about compounding and taking smaller profits along the way, rather than run the risk of kind of betting the ranch and everything falling over.
Well, Bruce, we're going to have to leave it at that. Thank you very much for sharing your thoughts here on CNBC TV 18. It was a pleasure speaking with you.
Thank you all very much.
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.